This is your LMAX Exchange technical update for Tuesday, December 20th, 2016. Euro dollar. So the euro remains under pressure since breaking down below that 2015 multi-year base at 104.63, and this paves the way potentially for the next major downside extension towards parity in the days and weeks ahead. At this point, it will take a break back above 108.75 to take the immediate pressure off the downside. Sterling dollar. So cable has been very well capped into rallies towards a previous base at 127.96, and this keeps the overall pressure on the downside and the downtrend firmly intact in favor of the next downside extension, potentially back towards the recent 31-year low just under 120. Dollar yen. Dollar yen is finally starting to see the onset of a bit of a correction, with daily studies running into overbought territory after moving up so significantly over the past several weeks. However, the uptrend now is intact and the market has seen a structural shift that favors upside, and if we do see setbacks over the coming sessions, they should just be looking for that next higher low ahead of a bullish resumption. Ultimately, any setback should now be very well supported ahead of 112. Euro Swiss. Euro Swiss is breaking down now as it inches closer to a retest of the 2016 low at 106.24. At this point, it would take a break back above 109 to take the immediate pressure off the downside. Aussie dollar. So Aussie remains under pressure, and this market is now inching closer to its medium-term support in the form of that 71.45 low going back to May of 2016. Dollar CAD. So dollar CAD, the uptrend here is back on track after being supported ahead of 130, with a higher low now sought out at 30.81 ahead of the next major upside extension beyond the recent highs that we saw going back to the month of November at 135.89. Kiwi dollar. So Kiwi continues to break down in the latter half of 2016 after it put in a 2016 high back in September, just shy of 75. At this point, deeper setbacks now are favored towards next key medium-term support at 66.76. SPX 500. The S&P 500 has recently put in a record high, and the market remains firmly constructive and could be poised for fresh upside beyond the recent highs in the 2280 area and towards and through next key psychological barriers at 2300 further up. At this point, short-term support comes in around 2245, though ultimately we would need to see a breakback below 2180 to take the immediate pressure off the top side. Gold. So gold is showing potentially some signs of reversal after trading all the way down and being under pressure for the past few weeks, trading closer to 1100, but daily studies are oversold and the market does need to see a bit of a corrective rally at a minimum before considering the possibility for a bearish resumption. However, on a longer term basis, there is still the possibility of the market carving a more meaningful base, and that would happen if the market, or good chances of that happening, but the market will need to establish back above 1200 to get that basing outlook going again. For now, the pressure does remain on the downside, but daily studies warn of a healthy correction ahead.